How's it going? Welcome back. It's Jonathan. Now, it's been a little while since I've done another video. Today's date is the 18th. We've had some time go on since our last video. And the reason for that, as you know, is because I don't like to get out here and give you guys videos when I got nothing to talk about. So I am building forecasts which are based around the Bitcoin price and also the Dow Jones, just to show you guys that this can be done. And if I came out and did a video every day, like these other guys do, I'd just be telling you, oh, the market's bullish, oh, the market's bearish, oh, the market's bullish. No, I want to give you guys more concise ideas after the ideas that I put out in the last video had started to play out, so that we can track them, so we can see how they've actually ran live in front of us. And that'll give you more, at least confirmation or I guess proof of concept that these ideas and these concepts that were developed by Gann, 60, 70 years ago, are able to be replicated in modern markets today. So before I go into those two, I just want to let you know that if you haven't joined the Gann Mastery Program, you can still jump in. We still have several seats left, and that the price has not risen yet. So the current tiering of price is still maintained. So you're more than welcome to join at the current price range. And I'll also re-extend that discount from last video into this video, just because I've had a few people query about the price and what's included, etc. But just so you guys know, I am working on a new intraday theory, and this is based on Gann's square of 9. And what I did last night before the market opened, and the market opened, as you can see, 16th on the Saturday to the Monday here, is I put into my trading view for Euro USD an intraday forecast based on price and time. Well, I haven't done time for the intraday one just yet, because I'm still figuring out that intraday concept. But price, where price may cluster and find resistance based purely on the square of 9. So you could go in to your theories of support and resistance, that's okay, but the square of 9 is a natural support and resistance level, and it doesn't consider support and resistance in the past. So if you, for example, use your standard support and resistance levels, you'd go, oh, the market is going to find some resistance here to the up move. Yeah, but how do you know that? Why would you say that that is a very significant level over any other level? That is where the square of 9 comes in, because the square of 9 is an organic, natural support and resistance level. Now, I put these levels on my chart yesterday before the market had played out, and as we can see already, the market has come up to our first, quote-unquote, take profit or resistance level. It has then come up to our second square of 9, aka take profit resistance level, before trending down. Now, what is important is to see if the market is going to respect these levels, or if it's going to break through them. Now, each time it breaks through a level, what it's going to do is it's going to head for that next level, okay? So once a level is broken, the next most logical resistance level is that next level based purely on the square of 9. Now, I might flick over to this chart before I end the video to see what has happened if our first green one or our second black one here for resistance levels, because we were looking at the market moving up and also moving down, and we wanted to see where these support and resistance levels would occur. So we'll see what happens, maybe by the end of this video, to see if we're getting some resistance on these levels or not. And why can't I delete that? I clicked a lot. Let me get off this. Silly me. Thinking I'm trying to delete something and I'm still clicking with the pen. So let's get rid of all these, and we'll just watch that play out. I'll come back just right before we end this video, okay? And we'll see if our square of 9 is still providing some sort of resistance on this level here, or if maybe it's found some support. It's not going to shoot down that far, but anyway. Let's move on. So yeah, as you guys know, we track the Bitcoin price and the Dow Jones for our X dates, turn dates, price analysis, etc. We're going to head back into that and take a look. So you can go back over past videos and watch how I possibly built out this formula. You'll see that I've got some calendar day counts here, which are very significant in Gann trading, and I've also marked on very important highs and lows in different colors. Unfortunately, I couldn't mark them all because I only had 3 different colors in Optima, which unfortunately is a super duper drawback. I can only select red, green, and blue. Super annoying, because there are other turns that I wish I could track, but it wouldn't be easy to do that. So if we just head in these two here with the arrow pointing up and down, up and down, up and down, up and down, these are the ones that we were tracking for a change in trend before the market had actually gotten to those periods. And this yellow, red, yellow, and yellow area were the price levels that I was watching to see if price would come down to before reversing. So if we go ahead and update this, we're looking to see if the market was topping or bottoming around these time periods. We could say that the market found a bottom around this time period. So I'll get rid of that top there. Around this green one, we were looking for a change of trend to occur around here. As we can see, the market did find another bottom, just one bar after the suggested time frame. The market here, this is into our X date now, did find a top. And now what we're looking for is to see if this red one is going to find a top or a bottom towards the end of the X date. So the ideal situation now, if I can possibly get my pencil, would be to see if the market is going to head down and then up around the end of this X date, okay? That would be the ideal situation. If the market does rally higher and then find a top around this X date, and I have to mark this as a top, that would give me a bias that we're probably on the bear side and not the bull side, at least for now. So it looks like it's going to be a bear side bias where the market is going to find a bottom and then move up, and that would be the ideal situation. This is not really the best chart for this because we haven't got any new data, and we're moving into our X date in about 4 to 5 days into the end of our X date. So we got about 1 more week's worth of data to see how it tracks into this end of this period, okay? So if you have been watching the Dow Jones and watching it play out, I did think that possibly we'd get a nice sweep low. That didn't occur. Instead, we've just continued to see a series of higher lows and higher highs, okay? So we can see that all these low periods are getting higher and higher. And that, you know, if you ask anyone, that is would be considered as bullish market behavior. So if we take that into consideration, it could be that, you know, the market would go up from here. And now our bias, of course, for the year for the Dow Jones is rising prices into the end of the year. So it wouldn't come as a surprise if we get a break above this high over here. Okay, that wouldn't come as a surprise, and it'd be something that we would be watching to play out, up, over, down. Okay, so that's the end of that one. Let's save that workbook so we can come back to it in the future. Let's take a look at Bitcoin, see what's happened over that time period where we were watching for both the squares, so the square of 9 on the crypto market, and also our timing cycles. So if you don't know, this is our 90-day Bitcoin cycle. Last video, we were making a low around here, and we forecasted out that we're looking for a midpoint of our 90-day cycle to occur here, and then a potential another low to occur in November. But then we also had our second cycle that we were watching, and we were looking for a low to occur around this period. And then we highlighted that potentially we could get a nice, decent low around our X date. Now, a lot of people have different theories towards this X date or towards these time periods. Some call it the quadruple witchening, which is an options expiry period. Some don't even believe in this whole time theory at all. I think it's pretty clear that it works. You can't say it doesn't work. ICT, anyone else, they all use some form of time analysis in their forecasting. I just do longer range time forecasting for the bigger picture moves, okay? So we were looking for a potential change of trend to occur around the 13th. The low came on the 11th, still within our end of cycle time period, so totally on track. Nothing wrong with that. If we were to now extrapolate this out into the future, I don't want to keep extrapolating this double cycle out into the future because it's actually going to get quite annoying as time goes on. I'm hoping that eventually we will just lead one cycle again, and we won't need to monitor 2 cycles. But if this is going to be an indication of the future, we do have a left translation top of this one right here, which could possibly mean, so shorter time period moving higher, longer time period moving lower. That could possibly mean, not a guaranteed, could possibly mean that the market will break this low over here again in a closing period at the end of the cycle. How is that going to change market direction by using our double cycle theory here? Well, if the market can find a higher high over here, so if this new cycle that we're tracking now with an end of cycle occurring around December to January, December to end of December. If prices can find a low and then move higher before this midpoint, again, just go back to last videos if you are finding it hard to track along, and break this top here, then that would realign both of these cycles here to a right translation top. So yes, we had intermarket vibration. The market did move up. It made a right translation top tracking this cycle here. And that would mean that this cycle here would be a higher high, okay? And then it would also mean that this cycle here would be a higher high, okay, based on where it ended. Now that would be the ideal situation. Now what we have here is two end of cycles starting to now have an orb period that crosses. Let me get rid of all this mess. Oh my God, so much mess. So this could be where we move from our double cycle theory back to our single cycle theory, where we now, let's get a rectangle. This period here might be where two cycles converge into one. I'm just hypothesizing right now. We get a either left or right translation top with some important low. Don't look at the price angle here, but some important low in this area here. That could be what turns our double cycle into a single cycle again, and that might be an ideal outcome, because I'm getting tired of tracking two cycles because it's getting really confusing. So let's start watching the end of November into around the start of December. We'll give it an orb period as well, because we need to deal with orbs. I'll go from this midpoint to this midpoint. So this is our orb period. Orb period just means time before or after. Generally there's a calculation for that orb period, but I haven't done a calculation, as you know. Bring it to front, bring this one to front. Yeah, that's the ideal situation. So let's see what happens from here on out. Now, if you wanted to look at price, well, if we look at our Bitcoin squares, we can see that actually the market hasn't sustained a break below this square here, which is providing significant resistance to the down move. As we saw here, there was also significant resistance to the down move. So this square is actually really important. Now, if this square is broken, we would look to the next orb down on the square of 9, which would be this one down here, which is a repeat of the same color sequence, okay? So the color sequence is as it travels through the square of 9, and this blue one here has a color sequence to this blue one here. That's why we sort of track. If we found resistance on one green one, we would then go to the next green one, and we'd go to the next green one, and we'd go to the next green one. And if it finds support or resistance on a blue one, we'd go to the next one. Okay, that's sort of how that works there. These levels are sort of interlinking. So we got a low here, we got a high here. The market is, oh God, all these lines, sorry guys. The market is now tracking across this square of 9, and yes, it's not, you don't need to have direct hits, okay? You do any sort of Fibonacci analysis, and you'll know that, okay, we're looking for 100% extension. Now, if you want me to draw that for you, we'll pop on our price extension. We'll go from this low to this high, and we'll extend it from this one here, bring it out, bring on our 100% extension level. I'm gonna actually just make these higher to give us more, so green to green to green. So if price is tracking from this low and it's come up, hit this high, and we now extended it from this low, so this is our ABC point, okay? I'm not teaching price here, I'm just trying to give you an example. If we're looking for price to hit this 100% extension level, well, it doesn't have to hit the exact 100% level to be considered an extension level hit, okay? There is an orb period in price as well. That's why we say it can hit within 1 to 2% depending on the market. So the market can hit 100% exactly, and that's a beautiful outcome. It can come short of that 100%, and it can also rise above that 100%. Either or, if market finds a top within a range of that 100% level, then reverses, you would classify that as a successful hit. Okay, you wouldn't go, oh, it's moved above 100%, it's invalid. No, you would go, okay, it's hit 100%, it's now reversing. You'd then use your new ABC pattern, for example. And the same thing with the square of 9, okay? Sorry, guys. Yes, these are natural support and resistance levels, but we're not looking, yes, it's beautiful when it has that exact hit. You know, we get that exact hit oftentimes, but it can stretch through it, okay? It can stretch through it, and if it reverses, that's still an exact hit. Okay, well, not exact hit, a hit within a null period. So I hope that sort of makes sense. This is sort of what we're tracking. If the market does break below this green one, we'd go down to the next green one. If it does advance, well, then we'd be looking for that next advance up to the green one. Why are we watching the green one right now? Because that's where it's providing the support or resistance level along this line here, okay? And then if it breaks the green one, again, down to this green one. If it finds support on this blue one, then we'd use the immediate green one above it, the immediate green one below it. If it breaks through, we'd go to the next blue one. Okay, sort of makes sense. We're moving through the square of 9. Let's head back to this one here and see if there's any new data. No, there's no new data, which is a shame. I was hoping maybe we could get some price action around here. I want to see what happens when it touches this one here. Maybe I'll put out a second video today of this price action. I might do it tomorrow after the price action has actually played out. But yeah, I'm going to be teaching this once I figure out the intricacies of the timing cycle stuff. And as you can see, I've been playing around with the square of 9 on price, and you see that it reacts beautifully in the euro. And I've also got it working on also the 1 hour chart. We're looking for major time cycles to occur. And I'm just researching how far price has moved. So I'm doing a bit of backtesting now on the Euro USD to see how far price moves when our time cycles have rolled in. Okay, so that's all I got for this video. Talk to you in the next video. If you haven't already, you want to join our backend, go ahead, join it. Choice is yours. I'm not going to force you to do anything you don't want to do. Yeah, if you want to go there, that's where I'll start teaching all this cool stuff. Catch you later.